with a particular focus on halal investing. So this really means ethically screened investments that avoid interest-based transactions and boast healthy balance sheets. So in short, quality investments with quality returns.
Can you elaborate a little bit more about ethical investing?
Sure. So at Azzad, ethical investing for us is really about fairness, being fair in the way you earn investment returns. So we avoid investing in areas which can take advantage of an individual's weaknesses or temptations, or that can cause harm to oneself or others. So we're seeking investments that promote risk sharing. We're avoiding those that are speculative. So, for example, we avoid interest-based products which can put the entire burden on the borrower and offer no risk sharing. At Azzad, we believe investors should not have to sacrifice their principles for profits, and we really do this by making ethically screened, interest-free investments with healthy balance sheets. Studies have even shown that SRI strategies, including those that we use at Azzad, give investors the opportunity to earn a competitive risk-adjusted return. And by the way, SRI investments currently amount to more than $6 trillion in the U.S. So halal strategies in particular that we employ with their focus on low debt or no debt companies and alternative securities also give investors exposure to those investments that we believe are going to be well positioned to endure some of the volatility that we're expecting in coming months as the Fed moves more towards a less accommodative interest rate policy.
Okay, so let's just talk about the process when you go through when you're evaluating companies. Besides the ethics, are you just looking at the strict fundamental analysis, earnings, cash flow? Is that what you start with?
Well, again, because our focus is on socially responsible, we start with our ethical screens. So for the Azzad Ethical Fund, which is our mid-cap growth fund, again, we're looking for ethically screened companies that are poised for growth. And again, what that means for us is we're looking for sustainable businesses with quality returns and healthy balance sheets. So we start with applying our ethical screens. And that, again, just means that we're clearing steer of investments that run afoul of certain ethical principles like impermissible lines of business like alcohol, pornography, weapons of mass destruction, financials, and the like. But then we do move on to a quantitative and fundamental analysis that really guides our selection process. We tend to favor companies that have quality products or services in growing industries, those that are showing a distinctive competitive advantage, quality management, and of course what's important to us is also conservative financial practices. So in short, after we look at the ethical criteria, our quantitative analysis is using a discounted cash flow analysis to look at factors like profitability, cash flow, growth, low debt, and consistency.
Okay, well, now we know how strict emphasis on the fundamentals here. We talk a lot about charts, and we talk about technical analysis. Do you employ any technical analysis? If so, what are your favorite techniques and/or indicators?
We actually don't use any technical analysis at Azzad. So, our objective is really to find companies that are simply trading below fair value, that are likely to rise to fair value, and are likely to have their sales values rise over time. So, instead, we like to focus on the company story and really find management teams who understand how to create wealth.
Okay, question coming out of the chat here. What is your universe of stocks in the U.S. and globally after you do the ethical screen? Does that really eliminate a lot of stocks and/or sectors?
Well, because of the screens, we tend to eliminate, financials and utilities. However, that we also end up doing an overweight some in technology and healthcare. So again, we really feel that the ethical screens are not inhibitive to us finding quality companies that can provide quality returns.
Okay, let's going into, your investments. I mean, you have people from, investing with you that are looking long term. Is that what you focus on, long-term horizons for your investments, exact entries, exits, and stop points? Is that the way you approach it? Or is it the longer it goes your way, the longer you're in it?
Well, we really tend to have multi-year holdings. Don't employ any kind of definitive timelines. We've had some stocks in our portfolio, it's like O'Reilly Automotive and Alexion Pharmaceuticals since 2009. But of course, in addition to the investment outlook, whenever looking at exiting positions, our ethical screens come back into play. For example, a company may add a subline of business that fails our screens, or they may add additional debt to their balance sheets.
We'd love to move to specific sectors right now. What sectors or stocks are on your buy radar for this year?
Well, in equities, we remain optimistic about mid-cap growth stocks. So the dramatic move lower in energy prices, as we've seen, caused volatility in the equity markets. But it's also created opportunities for us in the centroid of the style box. So if energy prices remain low for an extended time period, we expect our picks in retails and consumer durables to be the ones that are really going to benefit, as well as several of our names in industrials and technology. Research is telling us that it takes about 6 months of lower gas prices before consumers start spending. So more generally, we expect to find opportunities in both equities and fixed income. In fixed income specifically for the Azzad Capital Fund, in alternatives like Sukuk.
Okay, and what about sectors to avoid in 2015?
Well, we'll continue to avoid companies that have significant debt and industries that are profiting significantly from interest. So like I mentioned, it basically eliminates sectors such as financials and utilities. But we've really seen over the last few quarters that the lack of exposure to leverage has really been a tailwind for the portfolio. There's an argument that a lot of true growth companies don't traditionally need to have a lot of debt in this phase of their life cycle. But with that being said, the action of central banks, debt has never been cheaper for a lot of companies, which has again distorted the cost of debt to cost of equity calculations. But limiting the debt our holdings could serve us well in a slowdown, as it helps us avoid companies that may have taken on too much debt, or those that have overestimated their own growth prospects. So we're focusing on stocks where the company management is confident about their current prospects and has signaled that through their corporate structure.
When you're investing in companies, based on the ethical investing model, do you continue to monitor them? I mean, has there ever been an instance where a company that, based on your research, that they meet your criteria, and then something happens and it discounts them from being in your portfolio?
Mm-hmm. Yeah, that is one of the areas where sometimes we have to exit a position. So, for example, we may have done an initial screening where the company passed the screens, and maybe later on they take on, an impermissible subline of business, or they add more debt to their balance sheets, which causes them to exceed our thresholds. And again, that would be criteria then for eliminating them from the portfolio.
So it's not. It's more just like the guts of the debt, balance sheet, things like that. I mean, like you're not opposed to going into like tobacco stocks or something like that, correct?
We actually do screen out tobacco, so we're trying to screen out anything that we feel again can be a harm to oneself or to society. So we're screening out things like alcohol, gambling, tobacco, weapons of mass destruction, and interest. And interest, again, we see as an area that can really put in the entire burden on the borrower and really offer no risk sharing. So we're looking for alternatives that can promote risk sharing, and those that, again, can be seen as ethically fair.
Okay, well, before we let you go here, wow, some nice volatility. Really, starting in October is when kind of things got going on with the Ebola scare. Still had the run up to all-time highs, and this been come back. Have had a really volatile market. Do you perceive that as just the way the markets are going to be going forward, or is there something that investors should take a little caution of in this recent volatility?
Well, I think investors should continue to be cautiously optimistic. I mean, there will always be opportunities for a long-term investor, and volatility is not always a bad thing, especially for a long-term investor who is looking to take, some of these opportunities. But at Azzad, we really strongly believe that an asset allocation has to be in the playbook. You have to be looking at an allocation that's based on your individual financial goals, irrespective of these market movements. And an appropriate strategy, of course, has to take into consideration risk tolerance, investment objective, and time horizon. And we really don't feel that investors have to be afraid to bring their ethical principles into their financial life. We've really seen that socially responsible investing can really help investors of all stripes achieve their financial goals without compromising their values.
Okay, great answer. We've been on the line with Fatima Iqbal.